Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Great to see everybody. Happy Tuesday, February 23. We are almost through February. So one thing I got to remind everybody, or maybe you've never heard this, is that the last 3 to 8 days of each month, I focus on the last three, are when we tend to see a lot of redemptions, things like that. People will take money out of the market. I'm not saying that's the sole reason for why the markets are down. The markets are down because and I'll show you some Fed Fund futures charts today to explain what's happening in the markets. But we do have this tendency, they call the black month-end black magic, where there's a little bit of selling pressure, especially within the context of an uptrend. We'll see a little bit of profit taking or redemptions, people paying themselves, and then a lot of times that money going back into the market the first 3 days of the new month. So last 3 days of the current, and then into the first 3 days of the new month, we'll see a little bit of movement lower, and then a little bit of movement higher. These are just tendencies. Don't hang your hat on them, but they're just tendencies. So taking a look here at the way in which we're pulling back, gang, again, it's really easy. First of all, what happens in this? And it's happened to me too. We're going to get stopped out of long positions, especially from more aggressive levels. We're going to get break even stopped out sometimes of long positions. And then once those trades are stopped out, we're not rushing back in to those same names again. What we're doing is we're rescanning the market, looking at what sectors continue to be strong within the overall market. And I think a couple of the sectors that have been really catching attention, and you can call this rotation, are things like XLE, XLF. They've been a lot stronger than the general market. In fact, the XLF, it doesn't even pull back. What pullback, right? So the first thing I want to remind everybody is, are you going to get stopped out in environments like this? Yes. All right. And so I think it's important that someone sitting on this side of the mic tell you guys that people are getting stopped out, or they're lying to you. Everyone takes medicine. So if you're in a place in your account going, oh my gosh, what's happening? It's only me. I'm the only one that's not seeing the market. Gang, everyone's either being stopped out, trailing stopped out, and they're rebuilding what their next round of trades are going to be. Okay. That's perfectly normal. And then we're also looking at where the money might be going now, as opposed to the kind of watch list that we might have built before. Okay. And that's really important, because sometimes we want to go after that name that took our lunch money. We want to go after that name that caused the stop, us to get stopped out. We want to get our money back, right? There's very much that type of thinking. All right, so I just want to put that out there, because I think it's really important for people to be really transparent about times like this. They ain't fun. All right, so don't get feel bad and feel down on yourself when someone says, well, we saw this coming and we've gone to cash. Oh my gosh, everyone on financial media went to cash, right? 5 days ago, please, right? So you know how it is. Okay, so I just want to put that out there, because I know that early in my career, I always felt like, am I the only one not seeing the market? And of course, if you turn around on the internet, on television, yeah, that's exactly what they're going to make you feel like. It's not true. Okay, it's not true. But it's good to be patient right now. Are there opportunities coming? Absolutely. Clearly, tech is taking a knee here, no doubt. Tech is typically really strong in reflation, and it's absolutely getting hammered at the moment. It's broken its trend. This is a trend break, and we're breaking down through the 55. So it doesn't mean that it's no longer a market that we can look for buys. All it's done is gone from an uptrend to now bullish chop, where we can use a tool like a slow stochastic. I like a 21K 3D slow stochastic. We can use Ready Aim Fire. If you're a member of Simpler Trading or bought the Ready Aim Fire tool, this is the kind of environment it absolutely shines in. These environments where we're looking for oversold levels. Okay, so let's get a little tactical here. Let's be real. And, we can let the folks who say, well, we saw this top coming and we're in cash, they can go live in, look, I got to put the boots on, the real high boots on for that kind of nonsense. But someone should tell you guys the truth. It ain't easy right now. So it will be great soon, though, because do I believe the overall uptrend will continue? Yes, but let me show you why the market's freaking out. Okay. And we'll take questions in just a minute. I just want to lay some foundation out there because in environments like this, the pig in the head can take over, right? Oh my gosh, this doesn't work. My strategy doesn't work. I'm awful at this. Oh my gosh, what happened? It'll never be good again, right? That's what the pig in the head tells us. What's happening? Let's get a little bit more. We talked about some internal psychology. Let's talk about some external psychology. And by the way, today, what are we rocking? Rocking a new mug. Number one, love Snoopy, my Valentine's Day mug. And what do we have in here? Oh, I'm still doing the Jamaican Blue Mountain pea berry from Volcanica. Smooth, smooth. All right. So what's happening in this market? This is the current look at something called Fed Fund futures. There's a whole futures contract dedicated to what the Fed is going to do next with rates. And let me fast forward us out to, let's see, December. Because remember, the market likes to look ahead when we worry. All right. To see that, let me show you again. Here's March. Target rate, 0 to 25, right? Jump out to December. See that? See that tiny little bump right there? That's a big, I won't say that's the only reason, but that is a big reason why the market is selling off. You're saying, Rog, that tiny little 12.7% target rate at a quarter to 50 bips is why the market's freaking out. That's why the market's freaking out. The market's concerned, and we have Humphrey Hawkins' testimony starting in less than an hour, right? 2 days of testimony Jerome Powell gives the Senate Banking Committee. And what the market is freaking out about is that we're going to slow down the asset purchases, that they are going to stop buying bonds because the perception is the market's heated up, the economy's heated up, I should say. And so it's justified to begin tapering and maybe increase interest rates, maybe late 2021 as opposed to maybe in 2022. The proximity is what freaks everybody out. The fact that that might come sooner rather than later. So this will be something to keep an eye on. All right. You can find this at the cmegroup.com. And this is the Fed Fund Futures contract. If you're looking for it, you can Google countdown to FOMC and you'll get this page. And you can start to look at each month and see what the target rate expectations are. And it's really easy to see as this tiny little column started to grow, the market started to come down. All right. So with that being said, let's jump on over to some questions. I hope that gives you guys some foundation. It doesn't make getting stopped out, it doesn't make the weakness any more palatable, but a lot of the doubts and a lot of the crazy thoughts and all those things where we just need to have an idea and an understanding to grab onto, that's what I'm trying to offer here. So I sincerely hope that helped. All right, let's see. Hey there, Kamal. What is my opinion on NIO? Kamal, I like this question for two reasons. One, I don't like NIO, but I like where your head's at. What I mean by that is if the markets broadly are pulling back, we can battle this with two things. And number one, this is no longer a buy, Kamal, but we can battle this in two ways. We can battle this by going to uncorrelated names that are still relative outperformers. Let me repeat that. Uncorrelated to the broader indices, but are relative outperformers. This is more or less uncorrelated, but it's not a relative outperformer. It's not a double green. So I like the idea, just not this particular name. A lot of folks in the same light have asked me about things like BLNK. A little bit better than NIO. Is it a relative outperformer? I can't say that it is. What about semiconductors? Here's a relative outperformer. It's tethered to the NASDAQ, but if you look at where the NAS seems to be holding, it seems to be mostly in semiconductors. And then you can get even more granular to the individual stocks that are still double green. They're out there. They're just fewer and far further between. So thanks for the question, Kamal. Alex, good morning. Do I agree with the CNBC story that claims Tesla price is now tied to Bitcoin? Oh gosh, not to bash on any television station. No. Tesla is, look, maybe Square, we can make an argument for that. Tesla right now has made more profits with Elon Musk's purchase of Bitcoin not that long ago. That is true. They've made more money on Bitcoin than they've made selling cars. But then again, a big part of their profits are selling credits to other companies. So let's not get into the reality of how Tesla makes money. Nobody cares. It's very much a future-paced idea of what they will be able to do, not how they're scraping by right now. In terms of when I say scraping by, I mean, they're not making money for the most part selling cars only. They're doing a lot of things, which you might think having lots of pillars of income is pretty smart. No argument there. Make cars, play Bitcoin, sell those credits. Okay. But the bigger picture and what should have been discussed, because I'm not going to say yes, I'm not going to say no, maybe a fraction, right? Maybe a fraction. But let's also remember that with the addition of Tesla into the S&P, and by the way, they've been in the NASDAQ. This stock is tethered to broader averages more now than ever before. So I might be able to grab some interesting little headline. And let's face it, financial media is here to entertain us. If anybody thinks it's here to actually give us actionable ideas, that's like saying I'm going to watch ESPN to learn how to play football or learn how to play baseball or learn how to play tennis. No, it's there to entertain me. CNBC is the ESPN of the financial world, which is great. I love ESPN. Okay. But really, the initial conversation about Tesla should be very much attached to this is a heavy-weighted stock within two major indices. Does that make sense? And I'm not bashing, but, let's be real, about the function of these indices and their impact on the individual stocks that are top 6, top 10 within them. So let's see, lots of blue light specials. Yeah, absolutely. Alex, you know it. I think that the easiest thing to do right now is for the next 2 days, as Jerome Powell tries to clarify whatever message it is about the future of bond purchases, their opinion of the economy, their continued asset purchases, and then therefore the associated money printing. Let's just figure out what they want to do and focus on relative outperformers and uncorrelated. I'd still like to buy some names that aren't as tethered to the broader averages. Tesla wouldn't be one of them, but yeah, I think there's going to be a lot of blue light specials. But let's face it, I'm also going to admit, because someone in my position has to. Otherwise, look, it just makes me crazy. Am I going to get stopped out of some trades? I have. Yesterday I was stopped out of a bunch of names where we have our, and it's really another good point. Take paper cuts now. I don't want you guys losing a finger later on. It's easier to take smaller losses. Take the small loss now, put the capital back in your account, clear your mental capital, and start looking for new opportunities. It gives you fresh eyes. Taking hits, taking medicine is part of the game, but little bits of medicine, right? A spoonful. That's all we're talking about. Can we take a look at BILI? Of course. Stephen, here we go. Relative outperformer, potentially. Pulling back, yeah, pretty hard. You can see where it's going to open right down there at the bottom of the wave. Is it buyable? I think you've got a really nice layer of volume between, about where it's going to open, but really you get a really nice layer of volume between about 120 and 117.30. So would I presume that it could head down there? It could, but that's really not even my bigger issue. Earnings right there, right around the corner, are my bigger issue. So we might see a little bit of profit taking of this overall very nice uptrend going into earnings. It makes sense that maybe some of Billy is moving, out with this broader outgoing tide, but I would reassess after earnings. So I don't think this gives you enough time to get your fill, get some follow through, and get flat. Fill, follow through, flat, all before earnings. That's probably too much of a time crunch here, seeing how today's the 23rd, right? Okay, so maybe after earnings, let's see if it goes and tests some of those volume levels, and then we could think about entering. So thanks for the question. Let's see. Just bought Stock Trader's Almanac. You just read it. I mean, honestly, just read it, and don't take anything it says as just what's going to happen in the market. I have mine here. I use it partly to read what's going on. There's some great educational material about historical likelihoods. It kind of turns into a little bit of a planner for me too. But look, just because it says that the markets tend to be down or up, it's just a tendency. like a pit bull tendency would be, or like sell May and go away, or like the Santa Claus rally, or like I was talking about that month-end black magic. Those are all tendencies that we know have this broader general influence, a probabilistic scenario. And then we've got to match up some kind of setup to that. We're going to match up the setup to that. All right. Okay. So next up is, oh, bear with me here. What website am I using? That's CME. I was talking about a sheet. I mentioned the CME. I mentioned what to Google countdown to FOMC, CME group. Let's see. Tesla's looking nasty. It's definitely broken its trend. That's for sure. Jay, your take on rising interest rates continue to put downward pressure on the market. Yes, that's what we were talking about with that CME. You got it. The long end of the bond yield, Abe, the long end of the bond yield, I think a lot of people are saying is trying to tell us something. And some people are asking, well, what does that even mean? The long end, the long bond, the 30-year, supposedly is again, the interpretation is that there's a suggestion that the printing and the support of the economy through the policy that they're implementing, the Federal Reserve, is going to catch up with them. That's what people say the long bond is. But gang, we've been doing this for 12 years. This has been a very established way that the Fed has determined back in 2008 that they can monetize debt and they can continue to print. And they are. And that is, in many ways, sort of the privilege of a reserve currency. So for now, it's going to work. So when is it going to stop? Nobody knows. Yeah. So let's see. What else do we have here? CLSK. Hey there, Nick. Let's jump on over there. Yeah, it went yellow back on the 11th. Still bullish. I would be a little bit more conservative about where I'd buy, but yeah, for the most part, it's uncorrelated. Nice thick layer of volume. It is buyable, but look at where we're opening. Gang, this is becoming much more a broader unravel of a lot of names that have been relative outperformers. And look at where we're opening, gang. Look at the pre-market levels down at 25.60. There's no harm in sitting on the sidelines and waiting for this to just sort of blow over with 2 days of Powell's testimony coming up. And if you're sitting through some unrealized losses that are within your allowable tolerances, because that's part of the game too, then just sit, but don't feel the need to jump in and add. Don't do that yet. Don't do that, because I know there's a temptation to say, I've got this position that's taken on some water. It's got an unrealized loss, and I could bring my cost average down if I add now. We don't know that this is the bottom, right? We don't know that this is where we bounce from. So if you're within allowable parameters of your maximum loss, and you're just just taking on a little bit of water, but it's within your tolerances, sit. There's no reason you have to keep adding to a position because it somehow makes you feel better to reduce your average cost. Very tricky thing. You want to actually find a brand new setup that may overlap with the previous setup, but don't arbitrarily add. Look for another setup. Maybe it's an oversold buy. Maybe it's an inside day. Maybe it's a minor low. Maybe it's an intraday momentum breakout, something we talked about in Sector Secrets yesterday. We talked about my wave reversal 1, 2, 3 intraday setup, something like that perhaps, right? But don't just arbitrarily add here. And then, yeah, is that a sort of an offshoot of some revenge trading? I don't know if it'd be revenge trading as much as it is just feeling better that your dollar cost average is lower and your P&L looks a little bit better. But it might be a temporary feel-good moment if there's not a floor in the process of being set up. Yeah, hang on, Snoopy. Yeah, isn't that true? That is very, very true. Very, very true. Let's grab another question, and then I've got to go head on over to the futures room and do some day trading. And that brings up a good point. In an environment like this, it makes sense to shorten the time frame. In fact, not only am I going to shorten the time frame, but I'm only going to trade the first 2 hours of the day, right? A lot of you that know my day trading style, be comfortable leaving the mouse and keyboard alone. Don't overtrade. Don't be a twitchy little day trader. Just because you can doesn't mean you should. And so, what's my every day? We talk about this same thing. Don't feel the need to trade. Leave the keyboard, leave the mouse alone until something really good sets up. And that's the patience that a lot of people forget is part of day trading. I don't know that I've told you guys the garden lady story that John tells from time to time, but maybe we'll talk about that tomorrow. Gotta go. Have a great one, gang. As always, thanks for being part of the Charts and Coffee crew. We'll cover some more topics later on. For those of you that are part of a Simpler and you see me in the various rooms, if there's a topic that you guys want me to cover in Charts and Coffee, hit me up when I see you guys in the room. Say, hey, Rog, next episode of Charts and Coffee, can we talk about this particular topic? Absolutely. A membership has its privileges. All right, gang. Be good to each other. I'll see you tomorrow.